Hey, what's up? It's Tim from EminiMind, and today we're going to talk about how you can trade the Fed meeting. We've got the Fed meeting next week on Wednesday, and it's not always what you think as far as the best way to capitalize from an upcoming Fed meeting. So I wanted to touch on how you can kind of get ahead of potential moves in the reaction to the Fed meeting next week. So we'll get into that. I want to talk about some trades from last week and a whole bunch of other things on the daily chart as it pertains to the ES as well. So let's dive right in. The daily chart here, we broke the swing high from last week. I've got that marked here. We had a series of, we also have the downtrend line that's been broken. And we also have a series of retracements. The first one off of the larger, this 34.93 is a large daily 50%, and then really it's a weekly. And then we had a retracement here. Actually, it was here that completed its negative 23, and then we pulled back and we've now bounced and completed the next negative 23. So going into tomorrow, we can draw up the next retracement. If we go higher tomorrow and don't pull back, then the next target is 38.92. That's the minus 61.8. If I just jump out to a weekly chart, you can see COVID lows to all-time highs. That's the 34.93 50% retracement that's below us. So we've kind of got a series of, we've got the long that had just touched. The short is in play. It did not make it to its negative 23% target yet. And so going into next week, because we're bouncing, I'm really going to be watching closely this next full 50% retracement short. If we bounce the next couple of days, I'll be looking to buy puts around, actually I'm going to go to the SPY because that's where I'll buy them, around 390 in the S&P. The SPY, excuse me. That will be the 50% retracement short. I'll look to do that on a day where we close kind of around or within the 50% retracement here. I'll do that at the close of the day, ideally on an up day. And that will position us for next week's Fed meeting to be already short if the market starts to roll over. Now, a lot of times what happens is the Tuesday before the Fed meeting can be a little bit quiet, and then Wednesday morning is usually flat. Wednesday afternoon, the meeting announcement comes out, and that's when you start to see the spike up, spike down, and then spike back up. If we close bullish on Wednesday, that's also not a bad place to buy some puts because Thursday we tend to have a bigger trend day, or that's when the news has come out, and now Thursday is the day after the Fed meeting announcement, and that's when I find that the better trading opportunities start. I try not to do really much around the actual announcement because even if you're right on the direction, it's so easy to get whipped out of the trade. You get short and then the market just rips up and then it rips down, and so it's very difficult to stay in a trade. And those are the areas where we're also going to see slippage and have more chance of not getting great fills. So positioning yourself ahead of time, looking at this 390 level to buy puts, and then next week if we start to sell off after the Fed meeting, you're already positioned. A couple of times that we've done this, at least recently, I like to buy puts as a hedge on any time we come up to a 50% retracement short, but the last couple of Fed meetings, I've been able to get short at the 50% and ride the sell-off into the Fed meeting and actually, have a giant profit already before the Fed meeting even occurs. So I'm only going, 2 or 3 weeks out at most with those expirations and just buying at the money. So like a 390 would be what I'm looking for. If we turn intraday and look at some trades from last week, I want to last week we talked about the importance of the 30-minute range, and that was very applicable in a day like today. Today's Monday, and so the 30-minute range today, we spent a lot of time within it. And the first hour of the day, these first 4 bars, this is a 15-minute chart, you can see the tails poked down below. This is the 30-minute low, and then we rallied back up into the range. And so when we break out of the first 30 minutes and stay out of it, then we have a better chance of going into a trend day. Now, today kind of turned around into the close, and from lows of the day, we had a pretty flat breadth and advanced decline line. And so from lows of the day, rallying back into the 30-minute range, you also have a really good chance of going, once you've been below the 30-minute low, and then you cross back into it, you have a good chance of going from the low of the day to the high of the day. And so you can see that first push up from the bottom of the range to the top of the range. Then you get a pullback, and then into the close we had a strong rally, and we rallied above the 30-minute range, but then we were pulled back and kind of closed right at the high of the 30-minute range. So that's a really good opportunity to look for trades at the top and bottom of the 30-minute range. And if you're not trading on like a 512 tick chart, I know a lot of people are trading on, or some people prefer like a 1-minute chart. Even just coming in and looking at things like hammers and inverted hammers around the top and bottom of the 30-minute range, even using like the low of the high bar and high to low bar kind of stuff, where you're selling below 1 tick below the low of a candle and and then just trailing your stop. These kinds of things can work really well around the top and bottom of the 30-minute range, and coming to places where you have like a low tick on the NYSE tick that lines up with low price, you can catch some of these extremes on extremes relative to the day. But on a day like today, where it's been range bound, we can catch the highs and lows of the day and at least catch a pretty nice move back into the 30-minute range. So just wanted to kind of touch on that again, because we talked about it a lot last week, and that was seemed to be a pretty helpful discussion. Let's go to a couple of trades from last week now. Monday and Tuesday, boy, I had a hard time trading. I just was not in, just was kind of struggling. Things were not giving me good entries. I had 3 stop outs and 1 winner in those first 2 days last week, but I was able to turn it around. And so we want to go to, we'll start with Friday. That was a decent winner here. I'm going to go to a 5-minute chart and zoom in on Friday. Back up on the tick chart. The trade was at 35 minutes after the bell, and I gotta go right here. So this one, I'll mark the top of the 30-minute range, because Friday we started with a pretty decent trend going up, and so that was right here. So that's the top of the 30-minute range, and the trade was the 705 right here. So notice how we broke above the top of the 30-minute range here, and we kind of rode on top of it. And at this point, this first punch above, right at the top of the hour, we did have a high tick at highs. And so at that point, there's a potential for that to be the high of the day. Once we break that level, so we broke that price over here, now we have a tick divergence, and we're not at risk of it being the high of the day. So seeing that high take out the prior high, and then drawing up the 50% retracement like this and having it line up with the top of the 30-minute range is a great trade opportunity. This one ripped pretty hard. Got the first target of 3 points, and then it went like 10 points after that, and I was just trailing the next retracement in the series like this, and that's where I got taken out underneath the 61.8. So that was a nice way to end the week after kind of struggling the first couple of days, or not necessarily struggling, but just I guess struggling, and really not getting much momentum. And so Thursday then, the 743, back it up here. Thursday's trade was at the halfway back of the day, and that's another good place to look for entries. So Thursday, 20. I'm sorry, it wasn't the halfway back of the day. It was a halfway back and the micro that followed it. And so we had this one here. And 20, why is it 19? That's why, wrong day. Get back here to the 20th and 43. Too far. Here we are. 743. It was a long, and it was from this double bottom to here. And we had broke the opposing short here, and then pulled back to the 50% retracement. That one went, I think, 3 points, and then got another 3 point on, got the first target, and then went for like 3 points. This one, I was trailing the next 61.8, and then when we made highs again, I believe I trailed it like that. We were also at a larger 50% retracement from earlier in the day that looks something like that. So you've got a double bottom at a larger 50% retracement, and just taking the very first 512 tick chart after that has after the larger one is set up. So that was a nice little move. And then going up to Wednesday, since I have Tuesday stuff on the live session, you can go back and watch. That was at 713 and 25. So 713. That one. So I will mark the 30-minute low real quick. And the 30-minute high, like that. We are, get some bearings here. Up at the top, up here. And 713, what do I have? I'm sorry, 6:58 was the time, 6:58. Back up a little bit. That one was here. And that one, halfway back micro, broke the opposing, poke below the 30-minute low. 19. Just trying to remember what I did here. This one, 1125. So we were, once again, starting the day at a larger halfway back. So just like the last trade, only kind of the other direction. We traded at the larger halfway back short, and then we broke the opposing, meaning the opposite trade, which was a long. See how it broke the 61.8 here? It poked down below it. And then we rallied up to that 50% short, and then that's where the entry was, and just trailing the next 61.8 on the move down. So that one went for a first target, and then the 2 points. And then the next one, 745, was when we got a nice little series going. And that one is over here. So 745. It's amazing how fast you kind of forget about past trades just in a couple of days. So we started from, notice how here's the 30-minute high, 30-minute low. We broke above the 30-minute high, and then we fell right back down. And then where did we go? From the top of the 30-minute range to the bottom of the 30-minute range. And so the first kind of 50% retracement in the series really didn't touch its 50%. And then the next one here did. And that was the entry right here. 37.29 was the short. Then we kind of hung around for a little bit, going sideways. It was 4 minutes of doing nothing, and then we sold off. Then I was able to start trailing the next 50% retracement on the way down, and did that for a couple of retracements. Then eventually got taken out. I got the first target, and then another 6 points on that trade. So that one worked out quite nicely. And then notice again, going from the top of the range down to the bottom of the range. So if you poke above the 30-minute high, then you fall back down into the 30-minute range, you have a good chance of, continuing to the opposite end of that range. So was glad that I was able to close out or finish the week strong after kind of struggling at the start of the week. And then next week, I plan to trade a little bit lighter, especially Tuesday, and then Wednesday I typically take the morning entirely off, and then we'll look to kind of go in more aggressively on Thursday and hopefully be positioned ahead of time with some puts if we can rally up to this 39.15 area in the larger daily chart on the ES. So if you have questions, drop them in the comments below. We'll be doing a live trading session tomorrow. EminiMind.com/VIP is where you can check that out. Thanks, and give the video a thumbs up if you like the content. I hope you have a great day. We'll talk to you soon.